Peace talks, good earnings reports, BOJ intervention, risk on assets are reaping higher. Let's dive into it.
Hello, hello, hello. This is Andrew Market Prep, and we are almost 1.5 hours into London session. So, what's been happening here in the markets? First of all, the dollar got wrecked by Bank of Japan intervention. So, as you can see here, dollar index, this crazy candle around 11 a.m. Jakarta time. And I believe this could be a good trigger for further dollar depreciation. As we see here, we are getting hold above 98, 98 to 97.9 support area, and we are heading down with oil down and indices up, with risk on currencies like Aussie and Kiwi also strong, and obviously yen strong after the intervention that BOJ conducted. Now, why are risk on assets strong today? There are pretty powerful factors that are driving these markets right now. One of them, which is the freshest, the strongest now, is peace hopes negotiations from the US and Iran, as Trump decided to end his military campaign, suspended, in the hopes of a peaceful resolution of the conflict. And this drives oil down, and of course risk on assets such as indices and commodity currencies benefit from it. Another factor that's been driving risk on assets higher, let's look at Nasdaq. Another factor is quite good tech earnings. So the sentiment, the bullish sentiment, has been driven by good tech earnings. Not across the board, but there are a few big names from Magnificent Seven that turned the sentiment quite positive, and it's been supporting risk on assets, stocks in particular, higher. And another fresh update is earnings reports from Europe that came out also quite good. Such huge companies like BMW and others posted good earnings that supported European markets, and we can see DAX is very strong here. So mostly we've got our risk on sentiment, and as I'm speaking, indices are grinding higher. Oil is crashing down below 100. Metals such as gold and copper are following indices nowadays, right? So they are also grinding higher. They are basically behaving like risk on assets, and we need to keep that in mind. It's not a premier safe haven anymore, the gold. Secondary, yes, but the main asset where investors hide their value is not gold anymore. It's the dollar, and we see it in the behavior of dollar index and any dollar denominated assets. Now, where are the opportunities today? Well, obviously everything is crazily stretched already, so I wouldn't chase these moves higher. I would like to wait for some sort of pullback, some sort of consolidation. And the time frame I'm trading on is mainly 1 hour to 4 hours. So I would like to wait for at least a couple of candles, so about 8 hours, to see how deep the pullback can happen. So the assets I'm interested in on the way up could be Aussie, as we see right now, and New Zealand dollar as well. Looks great on daily. We broke above 59.20 level, and we are likely close confidently above here, but I'm expecting some sort of pullback, maybe not all the way to 59.20 level, but at least half of this move. So if we check the let's say Fibo retracement from the beginning of today's session, so about 59.37, maybe 59.26 levels could be good levels for entering at a pullback. So Aussie is also attractive. Aussie has been the currency that's supported by the most hawkish central bank out there right now. As we know from the guidance, they are concerned about inflation. So in the last rate decision, RBA expressed clear need for hike, especially if inflation accelerates. But they already state that inflation is definitely higher, so there's a definite need for hike. So Aussie has been the strongest currency, relatively speaking, forward guidance wise. It's the most appealing currency for longs. So I would like to see again some pullback here. Now, if we look at indices, we see a similar picture. I would love to see some sort of consolidation. If you want to enter now, intraday, it's quite risky as you risk to get into some sharp pullbacks because the move is pretty stretched already. Now, when the pullback does happen, are there any opportunities on the way down for risk on assets? So I like FTSE. It's been relatively weaker than other indices. As you see, it's not aggressively trending higher like Nasdaq or DAX. It's been consolidating since February, and now we broke above this local resistant turned support area. So around 10,400. We also broke above 10 days moving average. Now, because it's a relatively weaker index, if there is a pullback, like globally speaking, okay, we are all going down here in indices, in metals. If there is a pullback, I would like to look at FTSE to short it. Why? Well, first of all, technically speaking, if we see candle closing somewhere below 10 days moving average, or even further, even below 10,400, that would be a good liquidity sweeping, right? And many people who profited on the way up, they would like to close their position, which would push the index further down. So I would like to short this index if we close below those critical areas. So regarding the news, we don't have many market moving economic releases nowadays, as the attention is mostly at Iran conflict and oil. So economic news don't have that much of an impact on the markets nowadays. Maybe when the war is over in some way, the attention will be back at economic data. But for now, well, today we have Canadian PMI 1 hour after New York opening, and maybe ADP employment might move the market a bit, but I doubt. So that's it for now, and be careful with these stretched moves. I wouldn't chase them, and stay safe out there. Till next time.